Yeah, I just want everybody to understand where we are in the market. And I want everybody to think long range, right? And I know some of you this might be the first time you hear this, but the financial market runs in a cycle, right? And right now, we are exactly where we were when I placed my first trade, August 6th, 2020. We're in the middle of a bull market, right? And we should be buying the dip on the indices. That's how we should be trading, right? Buying dips, trading up, right? Up and to the right. That's how we should expect these indices to roll. And as they drop these interest rates, you're going to see it. So I don't want people to be shocked or confused because there's really no reason for the confusion. If you look over here, this is April, May, June, July, August. I started buying August 6th, and I wasn't really I was green as a trader. I didn't understand a correction, and I bought into this correction and I got wrecked. But from August 6th until that correction, I went from a $300 account to a $11,000 account just from buying the NASDAQ. And you would figure if I had bought here instead of buying here, I'd have had so much money, it's crazy. But it doesn't take long to understand the power of just buying a little bit, buying a little bit, buying a little bit. There are going to be pullbacks, guys. They're going to be pullbacks. So you don't have to get in over your head. You can wait until you're up $500 or $600 before you get a second position. Don't get a huge second position. Keep all of your positions small. So when you have the pullback, you don't get in trouble. You don't blow your account, right? There's also another tool that most of y'all don't like using, which is called hedging. All you're doing is adding up all your buy positions and putting one sell position the same size as all those buy positions, and it doesn't weigh on your account. If this pulls back, you hedge it. Once it starts buying again, you close the sell position, and now you're right back in the flow of things. I get it. That's uncomfortable for many people. And I'm not suggesting that you try to do it on the fly. But what I'm saying is, as you develop your skill set as a trader, I think it's better if we developed a round skill set, right? I don't like scalping, but I know how to do it. I know how to do it because as a trader, I consider myself a professional trader. I need to have that in my arsenal, even though that's not my preferred tool. But whenever holding the trades doesn't work, I have to be able to shorten up the trade and still make a profit, during those months or weeks or whatever. Is everybody tracking? So this is all while the interest rates were low. And then you get into December 2021, we all knew that the Fed was going to raise interest rates. January 2022, the market starts selling. I think the Feds raised the interest rates on the 22nd. That was the first interest rate hike. And you can see as they raise interest rates for all these months, the market sold, right? So it sold all the way through September 2022, right? Even you could have sold all year. You see December 2022. Then it started buying in January of 2023, right? Why would it start buying in January 2023? You could have fibbed from this move to this move and your pullback is here, but it had everything to do with the rich people understanding that, hey, we're not raising any interest rates. Now we're just got to hold interest rates. So rich people put their money back to work in the market down here. They're not waiting until the Fed says, hey, we're lowering interest rates. They understand we're not raising anymore. So once they put their money in, you get the market trending up, right? The market trends up. And then eventually it catches fire in October. And that's when we got that serious push up when we broke this high and it was on and pop. Just that we broke this high, we pulled back to it, and we got out of Dodge. So I would look at the US 30, you know, if it makes sense on your chart, where we break a high and we pull back to it, you know, you're going to have to draw decision points, right? Hey, I'm going to get in with a 0.01 on the mini, or, you know, whatever. I don't know what type of account you have or what have you. If you're going to get involved in indices, you want to do it after they break out and pull back. You don't want to buy at the high because you don't know when this thing could turn around and start selling, right? You want to buy it once it comes back to an area of interest, and then you build your account from there. Any questions?
Yes, Todd, this is Rosa. I have a question. Okay, when you know it's going up because, okay, like they lowering the interest rate, so we know it's going to go up. But when the pullback happens, is that something we should be looking for news related to make that pullback happen? Or you just know it's going to happen? That's what gets me when that pullback happens. Is that news? Is that something that happened in the news that made that happen that we should be looking for?
You know, me and Sean argue about this all the time, but my answer is I don't know. Sometimes there is a news event, but for me as a trader, I don't care what causes the pullback, right? I just understand that a pullback is likely at any point. So here's what I mean. Let me go to this day chart on this NASDAQ, because when the NASDAQ broke this high initially, right? When the NASDAQ came back and tested, it broke this high and came back to test. We should have got in right here, right? You should have got in right here. If you didn't get in right here, it broke this high. It came back to retest. You get in right here. Now the market is pushing. You can't get in again, right? Maybe you're getting in at the pullbacks to your moving average. But your safe spot to get in, if you got in here and we broke that high, the safe spot to get in is at the next high. When this thing pulls back to this high, this would be a safe time for me to get in, right? Of course, you want to see a rejection and a chalk, right? To ensure the market is pushing out of here. But if you're adding entries in here, you got to understand that every entry you add up here, you're buying at the high, because these are just new highs. And we shouldn't be buying at the high if you're a buy and hold type trader, right? If you are a scalper and you're scalping at a high, I get it. But if you're just trying to swing this position, then you're going to have to come up with a method that will get you out of the trade before this market comes back and rolls up on you, right? Especially in between this high and this high. So we retested this high. So I would say this high right here needs to be retested. Where this yellow box needs to be retested. And that looks like where the market is going. So if it was me, if I bought right here, then I would feel comfortable, right, with the market coming and testing this high. I could buy again and push up, right? And now you're going to have a high right here. The next time it comes back, it'll come back to that high. It shouldn't come back down to this high. Does that make sense?
Yes, because what I usually be looking for when I'm looking for my pullback, I be looking like if there's an order block down there or imbalance that it could go to.
Well, that's true, but the only problem with that, Rosa, is like there's an imbalance right here that broke this high. Eventually, the market is going to have to address this imbalance. But I don't expect it to do it on this pullback. You know what I'm saying? I guess that's the because because of the extreme move that we had, that would be a hell of a drop. Like, I don't know what would have to happen but I guess it could happen, but I'm not looking for the NASDAQ to drop 1,600 points, 1,700 points. I'm looking for it to come here, and I would look for a reaction, for the buy reaction from here. And I guess if we don't get it, if it comes down to here, then I would check for the buy reaction here. And if it comes back down and breaks, then the next place I would look would be here. I would personally look in this area first, because that was the old high right here.
Yeah.
So I really think if you had bought NASDAQ from this point, then I would probably have a take profit or a stop. My stop loss for this buy would be probably up in this area. And maybe I would move it as this comes down, or maybe I would be selling this down because I know that by it pushing down, it's probably going to stop my position out. But that's what I mean by you have to come up with a personal strategy, because there isn't necessarily a right way or a wrong way to do it. There's going to be how Rosa is going to do it. What you don't want to happen is you don't want to take this buy on May 24th and be in profit and then lose all your profit, and it comes down and stops you out right here.
Yeah.
So if this is going to stop me out, then I want to be making money as it pushes down.
Yeah, and that's what I'm thinking about too, trying that hedging, because that
Well,
hedging, yes, because that's
I'll tell you, man, professionals hedge, because this is a prime example. You know, I mean, if I know that we're in a bull market, I don't want to give up this position, but I don't want to give up my profit either. So I'm just going to sell this down. Even if you didn't catch the sell from way up here, even if this broke and you said, man, that rolled down further than I thought. On this pullback and it starts selling again, I'm selling from here to protect my position. I'm not going to have a stop loss on this position because I got a hedge, I got to sell. And wherever this turns around, then I can close my sell and get a buy. And this will be my second buy position. It doesn't have to be perfect. It doesn't have, like, you know, you could, one of this sell position, you don't have to catch every penny that you were up on the way down. Maybe it comes down here and it turns around and start buying up. The most important thing about this is you get your buy position, and you can leave this sell position alone as it pushes up, because you want to make sure we're going up. It might break a high and pull back. Then you kill your sell position and buy it up. Or you don't worry about any profit on that sell position as long as you get you a second buy position. There are many ways to skin that cat. If you guys don't know how to hedge, I would watch videos on it, and many people hedge differently. The most important thing is to have a plan, right? What do you want to get accomplished? I want to get 2 positions out of this, or I want to protect the profits that I'm up in this one position. It's not a right or wrong answer. It's a your answer. Any other questions? Okay, so let's recap. If we're in an economy where interest rates are dropping, quantitative easing, what is the play?
The dollar will be selling.
I mean, besides
The
Kim,
indices will be buying, and the dollar is going to be selling.
okay, that's correct. It's important that you guys write this down, because this is the fundamentals that affect the market, right? Now, you know, fundamentally, those things are true, right? If we're going to lower interest rates, the dollar is going to get weaker, it's going to sell, and the indices are going to get stronger, they're going to buy. Crypto is going to get stronger as well. Now, that does not mean that you just go to your chart and click buy for the indices, right? If you had clicked buy last week, you'd be down a whole bunch of money. So you understand fundamentally what's going on. Now you just look for your technical entry on the chart, right? So you want to wait for your technicals to line up with your fundamentals. Once you understand where you should be looking, you're going to wait for the chart to tell you that it's time to enter. Does that make sense? Yay? Nay?
Yes.
Okay.
Yes, yes.
Georgina, you said why did gold drop that much? Oh my God. Okay, let's talk a little gold. Let's talk a little gold. You see the NASDAQ drop too, right? Okay, so gold comes up, consolidates, breaks out on you. It broke out, right? Gold broke out. So it needs to pull back. There's an imbalance, right? It just pulled back to test the same area it broke out from. You're looking at this as a fundamental reason that it pulled back. Well, if you think about this, if you were in gold, right? So let's say you bought gold down here and it pushed up, it consolidated, and it pushed up again. You might be up here, but like, man, I'm gonna take some profit, right? So everybody's taking profit and the price falls when people take profits, right? But the reason why you would say anything else pulled back is because it broke a high. It broke the high and it pulled back, right? Breakout, retest, and then go north. So gold is doing exactly what it should have done. It broke out. It's retesting the area that it broke out from. And I still expect gold to push to the north, right? So don't let it fool you because it's a big amount of points that it pulled back, right? It could pull all the way back to this area and fill an imbalance way down here. But the point is gold is still bullish. It's still going to go up. There's no fundamental reason that it pulls back. Well, I take that back. It could be a fundamental. It could be something out there that said, hey, man, this is why gold pulled back. But the chart told you that it needed to pull back. You had this big imbalance here. You had a big imbalance here. I think there were big imbalances on the 4-hour. So you had that gaping imbalance. You got this gaping imbalance. And there's still imbalance down here that I don't think we'll get to. But you see the imbalances on your chart. So as gold pushes down, and we cleared this imbalance right here. Once we cleared that imbalance, and then the next candle started pushing down, I knew we were going to go to this imbalance, right? And we almost hit it here. So maybe when the market opens, maybe we'll push down, maybe not. But this imbalance is still there. And there's another imbalance down here. So maybe gold turns and burns, right? But if you think about it, gold did the exact opposite that the dollar did, right? The dollar bought up. Just going to use UJ as an example. UJ is a son of a gun. All right. We knew the dollar needed to buy. So you have a huge imbalance here. You had a huge imbalance here. Well, the dollar bought up and pretty much dealt with this imbalance, right? There's a breaker block right there. That's where price came to. So this imbalance is pretty much dealt with. The only other imbalance left is this one. I'm not suggesting that the dollar is going here this week. Maybe what needs to happen first is we need to push down to break the swing low. I think that's the weekly swing low too. Yeah. Maybe we need to push down to break this low first. Then we will end up trading back up in that area. Or this low first. There's another swing low here. Maybe we need to break the low of this wick. Maybe we come down and break this low first, then we trade back up into the imbalance to trade lower. All we're doing is pulling back, right? Gold is still going to go north, and the dollar is still got a much bigger drop coming. So you can sit on those moves if you want. You need to have, I suggest that everybody has a strategy, right? And listen, we all can't trade everything. We all can't trade everything. So maybe you're focusing on the indices. Maybe you're focusing on one of the JPY pairs. Maybe you're focusing on GU. Maybe you're focusing on EU. All I'm trying to explain here is you as a trader understand the 35,000 foot picture now, right? As a trader, your advantage is I understand that the dollar will sell, will get lower probably for the next 9 months in general. So if you're selling or if you're buying GU or you're buying EU or you're selling UJ, that's probably going to be a decent play, as long as the interest rates are trash. But in my opinion, the better play will be buying the indices, right? And the reason why it's a better play is you don't have to worry about what the British government or what the Euro ECB or somebody else, the Japanese bank, is doing. You're only worried about the US dollar. So if you know that the Fed has lowered interest rates or is lowering interest rates, the easier play, in my opinion, is to buy the indices. Because if the Euro lowers rates more than us, the indices is still going to be going up. They don't care about what Euro is doing. But if you trade in EU, it's going to be sensitive to US news and European news. So although it's a similar trade, it's a little bit more complicated than your indice trade. Gold is going to be primarily affected by the US news. So as long as the dollar gets weaker, in general, gold is going to get stronger. You guys have any questions? Bruh. Does everybody understand? Y'all have a plan.
Do we understand what?
What you're doing?
Oh,
Do you have a plan?
ooh, okay, I understand.
Well, okay, you say that. I believe
If
you in the oil
You're
law.
you're such a hater on me, Todd.
No, what I'm saying is, wow, you're so defensive. If you listen to what I'm saying for understanding and stop listening to refute it, then maybe you'll get this.
Whatever, dude. Go ahead.
Listen, you were in a oil long based on a 3-month bullish order block,
Yes,
and you abandoned your position.
because it hit my stop loss.
I get it. I didn't have a stop loss. So what I'm asking you, right, and from your experience, if you would just put a hedge in until it started buying again, would you have been better off? And that's a rhetorical question.
Well, okay, let's say this. Okay. So what I did was
Rhetorical
first.
means you have to answer.
No. I got in the trade off of that 3-month on the block. I got in at the 50. I had a hedge till it hit, I think, the 75. And then I don't know. I did a couple of entries on that, and hedging wasn't. I'm not a good hedger, and it sold down. I can't even remember how many points that it sold down. It sold down. I think it might have go to oil. I think it might have almost cleared that 3-month order block before it started buying again.
I think that's immaterial.
No, not necessarily, because if you have a stop loss, you trade with a stop loss. I traded with a stop loss and it hit my stop loss, but I did hedge at least I had 3 entries on that trade. And then one of them was in a hedge and the 2 of them hit stop loss. So yeah, that was a lot for me.
Okay. So let me rephrase what I was saying. The indices are going to rise up. They're going to climb. Let's just look at the US 30. All right, this is the pandemic. The indices was let's just call this 19,000. At the end of the pandemic, the indices was at 36,400. How many thousands is that? Almost, that's about 18 grand. So if let's just say we're going to move 15,000 or 12,000.
Maybe we need another pandemic.
Listen, maybe we just need if we're going to move another 19,000 or 18,000, that'll put us at 47,000. That means from where we are right now, we got about a 7,000 point increase. 7,000 point increase. Maybe it might not be a pretty trade, right? Maybe you have to hedge to protect your position. But is a 7,000 point rise, is that prize enough for you to hedge or for you to get it right? It's different, this is not like a tornado where it comes like a thief in the night. This is telegraphed. We know without a doubt that the interest rates will get lower. We don't know the date. That's the only thing we're missing. But we know without a doubt that the Fed is going to lower those rates. So that means we know without a doubt that these indices are going to climb. We know that Bitcoin is going to climb. We know that these plays are going to happen. So all I'm trying to say to everybody who's on the call is to have a plan to where you can take advantage of some of these moves, right? These moves are going to happen over the course of the next, 8, 9, 12 months. So we have plenty of time to adjust to what's going to happen and what will be happening. And in a lot of cases, like this NASDAQ, the NASDAQ is falling right into our laps. It's falling. It's not buying. It's falling right now. So every last one of us could use this current drop as an entry point to get into the NASDAQ, right? Or gold, or the US 30, right? Or whatever. And it could be a buy and hold thing. But that's really just up to you and your imagination or your plan of how you want to attack this bull run, the bull cycle that we're entering right now. You guys have any questions? When did we talk about silver, y'all? Y'all remember talking about silver? Man, it had to be a couple.
It was on one of the recent
I know it was very, very, very recent
on the list that Ish put out.
Silver broke out. Now it's coming back. It's another asset that is very young in the cycle. So if you would put your fib on this, right? From this pullback to this high. Silver just came back to the 88, and now it's pushing up. If you just use this fib, then you know silver is going to be at $60 an ounce. You got it's at least you got another $30 that you can trade this back up. It's going to pull back down probably to about 25, I think, or 25, 27, somewhere around there before we start pushing back up. But it gives you an opportunity to take something and go long with it with very small positions over an extended period of time. So just understand that these opportunities, right? This opportunity to go long won't happen again for another 4 years, right? The next opportunity we'll have, we can always buy and sell within these opportunities, but the very next time we get a chance to buy and hold or to sell and hold is going to be on the opposite end after the economy runs too hot and the Fed is saying, hey, we got to raise interest rates. The same thing that happened in 2021 or the end of 2021. So, I just want everybody to understand where we are and the opportunity that is spread eagle in front of us. Any questions? Everybody good?
Yes, sir.
You was doing so good into that last comment. You was doing so good.
To what last comment?
Nothing.
What are you talking?
You know you have to always have a filter into that, girl.
Okay.
What I do that? Y'all off the chain, but
He don't even know. He doing it all so much. He don't even realize what he do.
Drop that.
I'm just trying to get everybody involved.
I get you. Go back and
Yeah.
replay. Go back and replay yourself.
Hey, Self, we have an awesome opportunity to make a lot of money. And more importantly, even if you don't make a lot of money, to at least see it and recognize it and learn, because now a lot of stuff that I heard back in 2020 makes a heck of a lot more sense. All the videos that I listened to, ICT, when he rants, talking about, folks, you're gonna be able to see it, but you ain't gonna be able to trade it. I mean, I get it. I totally understand and respect that, because that's the exact truth. If you never see it, then you'll never be able to trade it. But if you're looking for it, you're going to be able to see it long before you can actually trade it, right? Trading it is the actual difficult part, because then you have to exercise what you think is going to happen. And then you have to exercise it in a manner that you told yourself you were going to exercise. And that's a little bit more difficult than actually seeing the trade. But right now, I just want to make sure we all seeing the opportunity that's coming up, right? It's really in our face right now. We didn't catch the original burst in October, but the markets have pulled back since October, and now it's giving us an opportunity to enter that market. Now, when you enter, it might not be a clean entry. You might not get the best entry. Maybe you go in a little bit of drawdown. That's okay, because any one of us that enter the market in July, we got a great entry, especially this time in February next year, January next year. These entries will be remarkable. These will be remarkable entries by the time January comes around. By the time the election comes around, these will be remarkable entries. I mean, we might be up 5,000 points before the election. So it might start off sucking, right? It might look bad. It might skin you up a little bit. You might have to hedge. But if you just make it through the first month and a half, then you're going to have a great experience. And you're going to make, you know, a pretty good amount of money. Because that market is going to be out of here. All righty, good folks. Tell a friend to tell a friend.
Thanks, Todd.
Thank you, Todd.
Thank you, Todd.
Gracias, Toby.
Howdy.
Nefertiti. Nefertiti. Hey,
What?
hey, hey, Nefertiti.
Thank you, sir.
Guess what?
Thank you, Todd.
Man. Don't you hear the people telling you thank you? Address them and leave me alone.
Woo! Hey,
What?
hey, thank y'all. Hey, hold on. I'm trying to get. I gotta put this. I gotta pull the Nefertiti picture back up. I gotta
Are
say,
you recording? Please start recording.
hey, this is the Nefertiti headdress, just for everybody.
You're not gonna pull up my picture. I know you're not gonna pull up my picture.
I'm not gonna. Why would I pull up your picture? You know,
Oh,
you
'cause
know you was dead wrong. I'm pulling
No,
up.
I was not.
I'm pulling up because you tried to convince me that you had this on.
Todd, you're trying to
I'm
convince me that
scratching
I
my
look
head.
like
I'm
Auntie
scratching my
Mama.
head. Listen,
I did not look like Auntie Mama.
your headdress was Aunt your mama's. It
So
was
for the
the
people
exact
that's on
same- it
here,
was the exact
especially the
same-
women of color that's on here, let's
It
be
was the
clear so they'll
exact
know what you're
same
talking
headdress
about.
that-
Y'all, he told I had an African headdress on my head, and this joker gonna tell me happy birthday, ain't your mommy.
And Selena, you got to give them the context. You were in Ghana.
Yes, I was in Ghana.